So let's have a look at Bitcoin. First, as I always do, I clear out the chart and I zoom out. And generally, I can see that, as always, we're still stuck in the same range. The range that's in between here and here, roughly. So yeah, and then I guess we're some way at the midpoint, close to. And currently, price is, oh, I'm having it on log scale, so let's not do it on log scale. So this is currently the range we're stuck in: high, low, high, deviation close below, found support here on the weekly, and now it's finding support moving upwards. This is a weekly candle. This was not the best candle to have on a weekly basis, and now price is trying to get liquidity here, or at least take out these highs. And what I can see is that price is currently struggling to close above this level. Let me just use a bit nicer color. So what you can see here is that we also have a weekly block here, a bearish block as confluence. Last consolidation before the last move down. Now it acts as resistance. So we need to see whatever the weekly will do here. We only know it in a couple of days. But until then, price needs to show that it can close above at least this green line to be able to have some sustained momentum towards the next level, which is more or less here. This will be the next level, actually the midway, which I think also coincides with the yearly open, which is a level I still have marked out. Let's do it again. Let's find the yearly open. I think it was here. Yeah, that's here. I'll give it a different color. Just mark it purple. And I think last week price just didn't reach this level, but it would be very logical to assume this being the next resistance in confluence with this weekly level on the 50% of the range to wick it, close below, and then show some downside. I don't know to how far, but let's say in the bigger picture this seems logical. But let's zoom in a bit. As you can see, this weekly block held here. It had some support from this daily block here. I can also mark it, use it as a daily range. It went past these highs, just didn't reach yearly open, found support, and then now it's having trouble breaking above, or at least getting above these wicks again. I'm curious now if it will find support to make another push upwards to this region. But let's just look at the bigger picture. It's still the same. All-time high, lower low, lower high, lower low, here or here. And now we are maybe forming a lower high. So what am I looking at? First of all, I want to see this level hold. I want to see price. If it does something like this, then I think we can expect a down move, maybe towards this level again, and if it breaks this level, even lower, maybe up to here, or at least run these stops. But if price is able to get above the yearly open, above the 50 level, then I will assume that this level will hold as support, and we can at least see price move up to these levels. So it will hit these stops, and then what it will do then, of course, we still don't know. But let's just mark this out. This was the high. So I want to see price at least then you can just still trade it range to range. This level to this level. If it breaks, buy the retest up to this level. And for me, it seems that if we can break this level, it seems to me that we have open skies, at least up to this level. Although we still have a monthly level, I think it was around here. That is still quite strong level. I think it was 59s. So, but I think as always, level to level. The overall macroeconomic picture doesn't look that great. Interest hikes are coming from the Fed. Inflation is rampant. Geopolitics is rather unstable. And of course, we all hope that Bitcoin will finally deliver its promise to be an inflation hedge, just like gold has been in the past. But up to then, it's still a risky asset to trade. And we all have seen the confluence or the correlation with the stocks on the US exchanges. And until then, I think we should, or at least I will assume, that it will not serve yet as an inflation hedge. And of course, we had the super cycle narrative. It now seems to be the supply shock narrative. Yeah, for me, that's all just blah blah to keep crypto Twitter happy. For hopium for new all-time highs. And the reality is that I will just wait patiently until this level is broken, and within this I'll just trade the range. That's my plan to go forward. One thing that I would like to do to zoom out is that, and now I will move to the log scale, is that I always have some moving averages in place. And of many times you see the MA21 on a weekly. So you can just change the settings to weekly, which has been a good support, resistance, and support in bull runs, resistance in bear market, support here, support again here. And now we're looking, once it broke down, it retested the lows, a little bit of resistance, retest, new all-time high, broke down, retest, moved quite to the bottom of the range. And now, of course, it's interesting to look where price will be going. I will delete the drawings. So do we get a retest here? I don't know. Another moving average that I like personally is the daily moving average of 100 candles. So the DMA 100. Here I've shown the weekly MA21 and the daily MA 100. The daily MA being the green one, the weekly MA21 being the red one. And what I see is that overall, in trending markets, the DMA 100 is a cleaner moving average when it concerns support. So when you zoom in on the daily, let's see if I can do it. You can see that if price is trying to, let's pick 2017, it wicked the 21 MA quite often. Overall is decent support, but it could lead to a false positive. But as long as price is above the DMA 100, you know that we're still in a bull market. However, that being said, is that when market starts to reverse and when a trend break is showing up, then actually the weekly MA21 is cleaner because it will break down earlier and give you an earlier signal that markets are indeed reversing. As you can see, support, 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 breakdown, and the DMA 100 was actually later. And in this time of, let's say, chop solidation, the weekly MA21 gave cleaner cuts. But once the market decided its way to go, then the DMA 100 took over again, being a clearer sign with a small fake out here that indeed we were in a bear market, because the weekly MA21 actually gave quite some fake outs. And the same here. The moment the markets reversed, so we had accumulation, but the weekly MA21 was quicker to respond, of course, because it only takes into account 21 candles. on a weekly scale, that is. That's to take into account. But here, a retest was a clear sign for prices to move up again. But also, and then here, this was a really short parabolic-like run. But then here on the backside, when markets started to flip, both were good here. But actually, this one was good and this one was good. So that's why I use them both, actually. And here, the market bounce, bounce, bounce. It actually broke the weekly 21 MA. So here, again, I would use the DMA 100. And now, you can see again, quicker to flip. Good support here from both. And now, they're both turning down again. So slowly breaking down. So my guess would be that this level, then I can turn it on again, this level, this entire cluster, could provide strong resistance, also seeing the confluence of the moving averages. So this is also something that I will watch. Price can always, let's say, spike up a bit further than you might expect. So they actually might weaken to this level. But as long as the close on a daily and especially on a weekly level are lower, then I would still consider these moving averages relevant, especially seeing the historical evidence the averages has given so far. So let's just hide these two because it's just confluence. So in short, for me, a breakdown of this level would be a clear sign for me, retest, maybe up, down, retest, go. And this for me is quite a no trade zone because I want to see this level broken, at least the mid level. So in between here, if price moves up, breaks down, I would plan to trade the level down to this level again. Maybe scale out, and if it breaks down, I would trade it lower. If this one breaks up, I would consider buying the retest up to this level. And here price can do the same thing again, or bounce up, maybe do it like this, and then move up again up to, I think it was the 59,000 level. So that's the recap. And overall, this list of L1s. I was watching AVAX again. I think this was also a short I posted earlier. This was the level, or at least the last week, to be hit or run. It didn't manage. It found support on this daily level, also supported by this small block. Price moved up very quickly on low volume, relative low volume. For me, that's an indication that I don't know. For me, that gives doubt whether or not the move will be decisive or there's enough conviction behind the move. And what I see, it ran this level once, twice, closed below. So I'm not too eager to punt a short because I still want to see what Bitcoin will be doing. Because once this level is broken, then of course this range high and these stops or these wicks are most likely to get run. But once BTC gives clear breakdown signs of breakdown, then I would consider shorting this level again up to here or down to here actually. And as you can see, so I was watching Atom, seeing this level, it actually already broke the 50% of the range. And for me, it's likely to assume that we can run up to this level again, which has been a really, really solid support resistance line. So any wicks into this level in the close below would be a short for me. But here, this is no trade, maybe a retest of this level. But then I think seeing what Bitcoin would be doing, it would be a sign of weakness as well. So not the best level to punt along. Also seeing that this daily block still acts as resistance. So for me, it's still wait and see. Patience is key.